Banks provide us with an essential service. They take deposits and loan money, and this is something that's integrated in our everyday lives, and we really do need them. But lately, there's been a lot of policies implemented by the banks, and they're trying to paint themselves as the good guys in this situation of COVID-19, in the fact that they're putting their customers' interests ahead of their own. And really, this just isn't true. Hello guys, Brad here from The Guided Investor. Welcome back to the channel. If you're new here, consider hitting that subscribe button because I post regular videos about how you can do more with your money. Now you're probably thinking I'm going to start bashing the banks, and I'm not. Like I said, they provide us with an essential service, and personally I'm both a customer of the bank and I invest in the banks, and I actually really like the bank. But let's not forget their number one priority, and that is to make a profit. That has not and that will not change. As someone who believes in capitalism, there is nothing wrong with making a profit. When a company makes a profit, they tend to employ more people, pay more in tax receipts, and it's good for the overall economy, which is good for the everyday person. But this notion that banks are your friends and banks are the good guys is just marketing dribble. So let's look at some of the recent policies that have been implemented by the banks to try and paint themselves as the good guy in this situation. Most banks are allowing their customers to cease mortgage repayments for up to 6 months if they've lost their income due to COVID-19. Now, while this is a good option for those people who are struggling with cash flow, just bear in mind that this isn't an interest-free period. The interest you owe the banks over this period of time is actually capitalized on top of the loan. So what this means is that instead of you paying for the interest every single month, it actually gets added onto your loan balance. Now what this means is that as time goes on, the amount that you owe the banks is actually going to grow. The scary bit about this situation is that you actually start paying interest on interest on interest, and this is basically compounding working against you, and it can add up very quickly. So while this is a good option as a temporary relief if you've lost your income due to COVID-19, it's not good from a financial perspective when looking at your net asset position. The banks aren't doing you a favor, they're still getting their interest, they're just getting it from your loan balance. Now, if you're in this situation, try to get some income flowing back in ASAP so you can start making mortgage repayments again. The newest good guy tactic that some banks are doing is automatically switching your regular repayment to the minimum amount. Now, basically the idea behind this is that by switching to the minimum, you're going to free up cash flow, and it's going to allow you to have that extra breathing space in these crazy times. You've always had the option to do this, it's just been on an opt-in basis. So if you want to switch your repayments to the minimum, all you do is request from the bank that they do that, and they'll do it on your behalf. In my opinion, to do this automatically across the board is a little bit cheeky. By switching your repayments to the minimum, you're going to be in debt longer because the rate at which you're paying down that debt has just reduced. Now, the longer you're in debt, the more interest you pay over time. This is a very calculated move by the bank because they know that people who have the capacity to maintain those high level of repayments often are ambivalent about their situation, and they won't actually go in and change it back to a higher repayment. This means that the bank is going to collect more interest off those people that really didn't need help with cash flow. Now, this is not a new one. Banks have been doing this little trick for years. And basically, when you first take out a home loan, you're normally on a really good rate because the bank is trying to win your business. They're trying to get your loan on the books. Over time, the products that the banks offer change and the interest rate changes as a result. Now, you'd think that if the banks really cared about you as a customer and were loyal to you, then surely they would give you the best rate possible on the latest product possible. Well, this isn't the case. If you're not constantly reviewing your interests and actively asking for a better rate, then chances are you're paying too much. Now, in general, banks will not pass on the best rate without being asked. Many of the products they offer have a honeymoon period where you get a really cracking rate for the first couple of years, but then after that it reverts back to the standard variable rate. And again, this type of policy just preys on those ambivalent people that they know won't follow up their interest rate and just sit there for years on the higher rate of interest. No, banks aren't the devil. They are just a business trying to make a profit, but as a customer of the bank, you need to be aware of that. The whole notion of being loyal to a bank is just crazy to me. At the end of the day, they're there to provide a product and a service, and while that product and service they are offering remains beneficial for my situation, then I'm going to stick with them. But if there is a better offer on the table, you best believe that I am moving. No matter how much marketing money banks spend trying to get you to believe that they're loyal and customer focused, this is just not the case. Banks will be banks. At the end of the day, their loyalty lies with their shareholders. And often, it's better to be a shareholder of a bank than a customer. Thanks a lot for watching this video, guys. If you did like it, then please give it a thumbs up, and I will see you in the next one.